However, it may not pertain to you because your situation might be very different from what I am going to be presenting today. So in order for you to take any kind of tax position on your tax return, you must have a written statement from me, basically letting you know that, yes, based on your personal circumstance, you may use this tax strategy specifically designed for you with your own circumstance in mind, okay? Social media, okay? And I always sit there and wonder, I wonder if they're doing this as a hobby or are they doing this as a business, right? It would be a shame if they do this and if it catches fire and people really like it, they really go out of their way, incurring all kinds of expenses and do all that and not able to take advantage of the tax laws, okay? So my question to you is, do you have a hobby? And does your hobby pay you? Okay? So what are the hobbies? Let's see. All right. The IRS expects that a legit business will be set up to make a profit and not just a hobby, okay? But some people start businesses that are really hobbies just to claim the expenses and the loss on their tax returns, okay? And that's a no-no, okay? So for example, some of the hobbies people do, and it's like a whole gamut of things, right? From AirBNB rental to real estate investing, stock investing, painters, craft, photographers, musicians, dog sitting, dog walker, poker playing, flying antique fighter jets, you name it, right? Even gambling, okay? Is that your hobby or is that your business? Like if you actually be at a casino 24/7 and you lose money, is that a business or is that a hobby? Or what do you think? Okay, so can you actually turn your gambling habit into a business? And the answer is yes, you can, okay? But there are steps that you have to take in order to turn an activity from a hobby into a business, okay? So, a legit business does the following. The purpose to make income or make a profit, okay? It says income or profit. It doesn't say income and profit. I hope you see the distinction, okay? Income or profit. That business is also engaged with continuity and regularity. In other words, you do it all the time. You don't do it once a year. Does it make sense, everybody? Okay. So why is it so bad if the IRS goes in and tells you that your business is a hobby? Because if your business is a hobby, the income that you get is taxable, but the expenses relating to the hobby are not deductible. So you think about that. You don't want to be in that situation. You don't want whatever that you do, okay, that income is being counted as income, but all the expenses that you incur to generate that income are not taxable. That is like the worst case scenario, okay? So you want to set up your business in a way that basically would audit-proof this reclassification of your expenses from business expenses into hobby expenses. Make sense to you? And I'm going to go into two distinct examples about horses, okay? And you're going to see the differences between the two cases. So, you know, you can kind of apply that in your situation, okay? So now, there are 9 factors for hobby loss under this regulation. You can write it down. You can look it up on Google later, okay? Number 1, do you carry on this activity in a business-like manner with complete and accurate books and records? Okay, and I have seen landlords, okay? I have clients, I've seen people who rent out States who have a very messy accounting. They give me a bunch of stuff that make no sense whatsoever. The numbers don't make sense. And then a few years later, they come back and say, hey, Susanna, oh, I found this expense. Can you go back and amend my return, right? Okay, so that is not complete and accurate books and records. And if you get audited by the IRS, they're going to tell you that your rental activity is actually your hobby and not a business, okay? So all your rental losses or expenses going to be disallowed because it's a hobby, because you don't have an accurate books and records, right? So it's extremely important if you find yourself in a situation where you have your expenses for your rentals or whatever, right? Businesses that you do are kind of like everywhere, right? It would be helpful from a tax standpoint to withstand your tax position on the tax return if you have a complete, accurate books and records. It's extremely important, okay? Number two, do you have expertise in this activity? If not, do you use outside experts or otherwise study the activity in a manner that indicates a profit motive? Okay, so let's say if you never learned how to become a landlord before, you don't know how to do your books and records accurately, okay, do you actually take classes online to learn how to do it? Are you kind of like wing it? There are a lot of free classes out there that teach you how to keep your books and records accurately, like accounting courses, right? And if they go, oh, well, you know, you're just a, I don't know, like a cashier, okay? Like you're a waiter or waitress, and you're also on the side a landlord, okay? Well, you don't know how to do accounting, but, you know, you show the IRS that, hey, look, you know, I took this course online, and that's how I learned how to keep my books and records. You know, I don't know how to become a landlord, but, you know, I took this course, you know, on like how to become a landlord, okay? That's what they're looking for. Number three, do you spend time on this activity? The more time you spend, the more this activity will look like a for-profit activity, okay? Number four, do you expect appreciation in property values to produce the ultimate profits? In other words, if for those of you who are in the business of renting out properties through Airbnb, you know, what have you, or any kind of business, okay, the assets or the properties that you use in connection of running this business, do they increase in value over time? Okay, and that's very important, which I'm going to show you later why it's important, okay? Number five, do you have any success doing this type of thing in the past? Number six, does your history of profits and losses with this activity show that you engaged in this activity for a profit? Number seven, does a profit you realize or hope to realize justify the losses incurred or expected? Number eight, considering your other source of income, do you need this activity to work for your well-being? If you work at this full-time and need this work to pay for your household, you pass the business test on this answer alone. And lastly, number nine, is your personal pleasure or recreation absent from this activity? In other words, you are not golfing, fishing, horseback riding, woodworking, so on and so on. You do things for pleasure. Okay, so these are the 9 factors, and it's codified. Everybody is codified in the tax code, right, under this regulations right here. So if you ever get audited by the IRS, and if you can show them you have a check mark on each and every single one of them over here, you're good to go. Okay, they cannot disallow your loss because it's a hobby loss. Make sense, everybody? Okay, so for those of you who are running a part-time business on the side, make sure you follow this, okay? Follow this to the teeth if you can, okay? Most importantly is number 1 over here, because I have seen this over and over and over again, okay? People just do not know how to keep their books and records accurately. So very important. That's why I put that number 1. And by the way, the ordering of these 9 factors I didn't put this in like this, okay? This actually came out from the regulations. I mean, I didn't write this, right? I just copy and paste it like into the slide for you, okay? So I didn't come up with this. It's from the government. All right. So there are two ladies, okay, who love horses, okay? One is a dentist, and the other one is a designer, okay? Elizabeth is a dentist, and she has her horses, okay? Over 16-year period, she incurred about $441,000 in losses, which was totally disallowed by the IRS, okay? So here's her story. So she operated a dental practice, and she conducted a horse activity, breeding and selling Arabian horses. She couldn't use $441,000 as ordinary deductions against her rental practice income. Number 4, even though she spent a lot of time and effort learning how to deal with this very convoluted tax issues here, right? Hobby loss. But the one thing that really stood out in this court case is this, number 6. She didn't use her books and records in a business-like manner, okay, to identify profits, analyze expenses, take corrective actions, respond to changes in a timely manner, and make informed business decisions, okay? So that's what the court or the IRS was looking for, whether or not she could produce her profit and loss statement that would allow her to analyze her expenses, year-over-year expenses, and if she continues to make losses, what kind of corrective actions did she take to correct it? She couldn't prove that she did that, and that's why she lost the case. Oh yeah, I did not talk about a business plan, but having a business plan is extremely important to defend your tax position if you run a business and you don't want it to be reclassified as a hobby, okay? In this case, number 9 right here, she ran a business, okay? But then she did not maintain business cards that had her updated information for her horse business activity. When it was requested of her to produce her business cards actually showed old information, okay? So she did actually spend a lot of time caring for her horses, okay? But she did not spend a whole lot of time on the business side of the business, which is basically the sales, spending time on the computer, or maintain her records, or work on her marketing materials. Okay, so because of that, the court looked at that activity of her spending 6 hours a day caring for her horses as her a hobby, her, for personal recreation purposes, okay? In other words, she didn't spend time on her business, she kind of just worked inside her business, working with the horses only. So that's one of the deciding factors that made her lose this case with the IRS, okay? And then over here on number 11, my recommendation would be, like, if I were to do this, I would want to spend or invest a minimum of 3 to 5 business hours every week on this business, okay? Like every week. I wouldn't do it 3 to 5 hours every month. I do it every week, okay? Business plan, extremely important. In this case, Elizabeth got 1-page business plan, okay? So for those of you, do you have a business plan? Like, I know a lot of people who run Airbnb business, okay, or other kind of business, photography business, bird watching business, you know, dog walking, dog sitting business, okay? Do you have a business plan? Like, how do you grow your business? Okay, let's say if you're an engineer and you're running you're moonlighting, right, at night. Do you have a business plan to grow your business at all, right? And so that's the mistake a lot of people make, is that they don't have a business plan in place, okay? Because in any kind of serious business, people have a business plan. Like, they would look at their financial statements and go, oh my goodness, I spent so much money last year. Okay, I need to minimize my expenses. I need to increase my revenue. And how do I increase revenue? Okay, well, I have this software here, QuickBooks, whatever, right? And I keep track of all the revenues according to items that I'm selling at my store. Oh, this item A seems to bring in the most revenue. How do I sell more item A? Right? And then you start formulating a marketing plan to sell more of item A, because item A actually brings more revenue, and the expense to bring in that revenue is minimal, right? So that's what they're looking for. They, as in the IRS, okay? That's what they're looking for, okay? Do you have that granular detail of your record to be able to make that decision or not? Okay, let's say if you have a bunch of rental income, do you know, like, each rental income performance, right? Like, okay, this property A, this is how much income it has, the kind of expenses it has, you know, the kind of tenant, the area that the rental real estate is located, right? The demographics around that area, right? That's what they're looking for. So as long as you have that kind of information and you bake that information into your business plan, voila, you have a business, a real business. You don't have a hobby anymore, okay? Oh yeah, and then Elizabeth only incurred $2,773 of marketing expenses for the entire 16 years of her running this horse business, okay? So she didn't really spend a whole lot of time trying to promote her business. So therefore the court said, well, you don't actually run a business, Elizabeth. You're having a hobby. So therefore, your entire $441,000 of expenses are now disallowed. All right, so the next court case is Tracy Topping, okay? Now this lady pretty much did similar things like Elizabeth, okay? She's not a dentist, she's a designer, okay? And she also owned horses, and she used her horses and her equestrian activities as the sole sources of advertising for her design business. So if you think about this, okay, if Elizabeth had done some tax planning, she could have easily set up her situation in a way that would allow her horse-related activity be the source of advertising for her dental business. Okay, so let's see how Tracy did this, okay? So in this case, Tracy, before she did the horse business, she tried to use golf as a marketing vehicle, but that failed to produce any clients. So she was then gravitated toward her horse activity. And these are the activities that she did. She entered into equestrian events as the owner of the horse, and she also rode the horses. She attended equestrian events as a spectator, okay? She also bought a ringside table at the jockey club during the season, equestrian season, okay? So that she could prospect 540 equestrian enthusiasts. She also made contacts at horse shows, right? So she did a lot of marketing, as you can see. And then she also followed up with her prospects after the horse shows. So if you, like if you were Elizabeth, okay, and you knew this is what Tracy was doing to get her horse-related expenses be treated as a deductible item. Do you then know like how to maneuver your own personal situation so that you would create a activity that's kind of mirroring what Tracy is doing here? You know what I'm saying? Okay. Instead of just spending 6 hours working on the horses, you could actually go and do what Tracy did here. Okay. Tracy also led and won competitions so that her name was flashed before or on the leaderboard and be announced over the loudspeaker twice. First as the owner of the horse and then as the rider, okay? So that's the difference between tax planning versus tax reporting. What Elizabeth did was tax reporting. What Tracy did was tax planning, right? She planned everything from A to Z, right? She intentionally did all these from 1 to 7. It just didn't happen like by chance, if you think about it. Does it make sense to you? Okay? She didn't by chance just win inside of these horse competitions, right? She actually worked to be a winner in this case, okay? And then when she won, she wanted to make sure that her name was actually being announced over the loudspeaker twice. Number one, as the horse owner, and number two, as the rider, okay? Now, Elizabeth didn't do any of that. She only took care of the horse or horses, and that's about it. And she incurred $400-something thousand of expenses over 16 years. Tracy did the same thing, but she was very intentional about this activity, okay? So 2 ladies, similar activities, doing things with the horses, but one, in this case, Tracy, okay, the court actually allowed her to keep her $251,000 of expenses as advertisement for her designing business. Basically, she says, you know what, Judge, I have to do like all these things with the horses so that I could get more clients for my designer business. So therefore, my $251,000 is my marketing expenses. And the judge said, the IRS said, you're right. I allow it. And then the IRS lost in this case. Okay? All right. So the moral of the story is this. Toppings, equestrian, and related activities were part of her design business. She also conducted her integrated design and equestrian activities to make a profit. And she and her equestrian-related expenses were considered ordinary and necessary expenses for the intertwined design business. She could trace her clients to her activities, okay? She could even show that AV trainer that she used for her equestrian activities was a referral source that produced business. Do you see the connection there? Okay. So lesson learned. Get your ducks in a row, have a business plan, a budget, good documentation, seek out help from experts in the industry. If you don't have the expertise, it's important for you on your business plan to have a mission statement because you're running a business, right? You want to maintain a separate bank account. So for those of you who have a rental, make sure you have a bank account for your rental activity, okay? You don't commingle it with your personal W-2 bank account, okay, separate. Use financial information to dissect your business and find ways to turn a loss into a profit. Okay, there are a lot of accounting software out there that you could use to dissect your financial information. Okay, a lot of them. I personally use QuickBooks. It's really easy to use, and it's somewhat cheap. Okay, I pay $12 a month. All right, so what are my conclusions? Conclusion number one, planning question. Do your records show where you get your business? You don't need to have big formal records, but you need records that allow you to trace your business to the source. And number two, regardless of how you conduct your business, pay attention to the records. I could not stress enough about records, okay? You gotta pay special attention to your records, okay? When you find your client, what is your client finding process is, how involved is it, and how you spend your time. Number two. All right, and this is an election. I don't see a lot of people making this election, but basically there's a way for you to tell the IRS to postpone making a determination on whether or not your activity is for profit seeking or not for profit seeking. Pretty much that's it. Okay, it's something that you could do. This is the form that you're gonna file, okay? I don't see a lot of people doing this, but it's an option for you, okay? It's available. So in this example, if you start your business in January of 2020, you should make this election before the end of 2022, okay? So the advantage of making this election, of course, is that the IRS will defer the determination whether or not your business is for profit or not. They don't make that determination right away. Okay, for those of you who you want to run a business, you are having losses, but you want the IRS to kind of give you a few years, kind of see if you make money or not. Okay, so you file this form 5213. So it will give you, like I said, 2 more years to show a profit, okay? But if you don't have the required years of profit, the limit can be applied retroactively to any year with a loss in the 5-year period, okay? So that's how you address the concern that you have about claiming your home office, get a tax loss on your return, not being able to deduct it because you don't make any income. Okay, you can do this 5213. So I think we're right on time. Oh my gosh! All right, here is a little picture that I found on the internet. As you can see, over the years, our tax code has exploded. Okay, and here's my wishful thinking or your wishful thinking. Here's the IRS sitting over here. That says, show me the money. And here it says, my son wants to pursue a career in blackmail and listening. I was wondering if you folks here at the IRS had an intern program. What do you think the IRS would say? Anyway, so here's Q&A session in the next 8 minutes. Here's my contact information. If you have any questions or any topics that you'd like me to go over in the next session next week, let me know, okay? We have quite many people who are new to this webinar, and that's the reason why I spent today to go over the very important issues in the context of COVID-19 and see, you look at your personal situation and see if you can turn your personal situation into a tax advantage situation for 2020.
Thank you, Susanna.
I see there
yeah,
are
go ahead.
3 questions on Q&A.
Okay.
So I want to answer very quick. So this is from Carolyn Valverde. What if you live in a 1-bedroom and you need the house for multiple purposes? This is part of a home office.
Okay. All right. So, like I said earlier, your home office does not need to be the entire house or even a bedroom. Caroline? Okay. I don't know what, in my earlier slide, I showed how in a tax court case, this person only bought a cabinet, right? A cabinet that's movable, and she would just put that cabinet on the floor, and that's her home office, because that cabinet has her business stuff, like business supplies. Okay, so she's able to take that little area as home office. Does that make sense
so I
to
think
you?
that you addressed that already, the question before those slides.
Oh, okay.
But I think Carolyn have further question. Carolyn, you can speak and you can have further questions.
Yeah. So most of, I asked the question before you clarified. So that was clarified with the cabinet. That was awesome. But one of the issues, and maybe it's, you already explained it, but I want to ask it again until I get the answer I want, which is, for example, even a desk is precious real estate, I guess, in our home. So if the kid and I, we literally share one big desk to do everything, and actually the cabinet near it is designated for my potential business, but the kids may need that space